Tax Talk will not be seen tonight, so we can bring you this very special presentation live from Detroit. You're watching Tax Talk Live with Markway Boyd.
On for 5 years, 6 years, 7 years. If you can justify that you are trying to make money, but you haven't made it yet, that is okay. Now, that's the first point. The second point that he alluded to was the fact that what is the difference between being a business owner and the business being classified as a hobby? Well, that is one of the things that the IRS agents are trained now to do. And that is to try to make your business seem like it does not have a profit motive. Now, why is that important to them? Let's take a business that made $5,000 a year, but had expenses of $20,000. That means they had a loss of $15,000. Yes or no? Yes. Now, if they classify your business as a hobby, because you spent 20, but you only made 5, your $15,000 loss, you can offset that against other income. So let me give you a good example. Let's say the $20,000, you spent $20,000, you only made 5, you have a loss of 15. If my spouse made $15,000 a year, we don't pay no income tax because my loss from my business will offset her income of 15. So for that year, we pay no taxes. So whatever was taken out of my wife's W-2 for that $15,000 will all come back to us. IRS don't want that. So if they classify your business as a hobby, that $15,000 loss, you don't get it. What do? They take your income, which is the $5,000 that you made. They only give you $5,000 of expenses, so it's a wash. And then that $15,000 loss, they throw it out. So, essentially, they are telling you, you are not a business person, you're just a hobby. That's a hobby, and hobby don't have profit motive. Are you guys following me now? So, how do you defend yourself against those IRS attacks? Well, number one, you determine when you started your business. Not the IRS determine that. So, if you have a business card, you have a letterhead, you have a website, you have a company t-shirt, and you're trying to promote this business, can the IRS come and tell you you don't have no profit motive? I don't think so, because you have to be crazy to spend all this money if you don't plan on making no money. Right? So if you have all this structure, you have formed an LLC, and you have a business bank account, you have a tax ID for your business, those things are all things that a prudent business person would do. And if you have all those things, then you are technically a business owner. And so your losses stay to offset your wife's income so you can have a nice refund. So did I answer your question?
Well, and the underreported expenses question.
Well, the underreported expenses, like I said, you don't have to do that. If your business is legitimate and you have losses, it is what it is. You just have losses, and you have to be able to justify it.
What is the IRS's weakest link? In other words, what are they not trained in compared to other items? Like, are they trained to audit C Corps? Are they trained to audit individuals? Have they had better training with auditing S Corps? What are their weaknesses, and how would you use that to your advantage?
Very good question. Now, I hate to say this because I'm not trying to slight IRS employees in any kind of shape or form, but they love the LLC Schedule C folks. Why? Because it is cut and dry. It's very simple. Income and expenses. That's it. Now, when you start going to S Corp, C Corp, well, those things are very technical and requires a lot of knowledge. Most IRS employees are trained on the job because an educated person that has entrepreneurship power in them will never work for the IRS. Because a master's degree person working at the IRS probably will be paid $50,000 or $60,000 a year. Are you kidding me? With a master's degree? No. So they train them on the job, and so they don't have the technical know-how when it comes to those complicated stuff. So what do? They leave those alone. Because most of the time, people that have S Corp, C Corp will have the money to be able to hire me to defend them. They don't want to go there. So they will pounce on the little folks. Because logically, if we pounce on the little folks, and I get $4,000 from her, because she doesn't know any better, and can afford microwave, and get you $4,000, and get you $4,000, they are better off that way than a corporation that will hire somebody like me to defend them vigorously where they will not be able to change anything and waste their time. You see the logic? So they will rather go after the smaller people. So S Corp and C Corp, hardly do you see them being audited. But LLC, that's a piece of cake. They can handle that.
You said that this while ago you was talking about one of the things that you spend money on and say that you didn't business. Say that you just had business cards, you know, and you didn't go to the website and all that other, you got business cards. Would that classify you, classify you as having business?
Not necessarily. You have to have multiple things that really, if you have a business card, everybody can make up a business card. So just having a business card really doesn't make you a business owner. But let's say you have a business card, you have formed an LLC, you have a business bank account, you have a tax ID number. It's only serious people that do all that type of stuff. The non-serious people will say, I have a business card, I'm in business. That's not good enough.
What's the minimum? Business card, a business checking account? That's good enough?
Business card, form an LLC, have a business bank account.
For more information about Smart Business LLC, contact Mark Wade Boy and the professionals at 248-395-3388.